Okay. On Wednesday, I think it was, we turned things around a bit. And I'd said that morning before, I had an epiphany, that was going to lead to it. So this was the trading part of that epiphany. It was surrounding price action and taking things back to the basis and realizing that, how do I put this? We do not determine what kind of trade we are going to enter with price action if we're looking at it from a realistic angle. We don't get to say, I'm going to scalp, or I'm going to swing, or I'm going to do this. We're following what the price action says and what it gives us and looking for the opportunities. At least that's when I'm going at a really, really high percentage rate, it's because I'm looking at a full set of options and just choosing which one of those makes sense based on the price action. When we all get into trouble is when we go into the day to determine what it is we're going to do. So what I took the time to do on Wednesday, which I'm going to share with you guys kind of as a foundation, was figure out what are the different kinds of trades I could be entering, right? I've generally eyeballed it and just looked and been like, oh, this looks like it's doing the channel that we're in, and then I'll go check that chart. But having them actually organized to the point where I could see exactly where supports and resistances are, I felt really in control again on Wednesday. And here are the 4 different kinds that I used. I had 3. I had 4. I think I realistically used 3. And that trade went 260%. So the 4 different kinds that you get are your basic scalping, right? So with your basic scalping, you're going to be looking at times when you have a good amount of distance between the weekly levels, between monthly levels, so that you can catch a bounce off the monthly and sell it the weekly. I'm going to rewind that a little bit because I realized that a lot of people probably don't follow that style trading, but essentially it's this. When you catch support at a monthly or you catch resistance at a monthly, right? The way that I scalp generally is taking those resistances and then just going to the next weekly pretty much, or I'll go weekly to weekly. I'll go into more details about the different kinds of plays that are within that, but that's essentially what's happening, right? I'm playing a strong support up to a weak support, taking my profits, and that's usually somewhere between 20 and 30%, right? So that's scalping. So what you need for that is your full charts done with your weeklies and your monthlies. You don't have to put like other kinds of levels that you find in there. It could be helpful, but you don't necessarily need to. But that's what you need to be able to do that effectively, right? So I might catch something like, let me see whether it's a good scalp. Okay, here. So, oh, they gapped, so that didn't help. I'm not going to take that one. I'm trying to find a good example here. So here. Right, I've got double support at a weekly at 503.37, and then I've got space to 506.54 for the next weekly, right? I've got a strong wick off that's telling me that we're going to go up, so that would be a great scalp, right? That's, you're looking at 2-3 points, so that becomes directional. So that's number 1. Scalp trade, I'm not going to let myself get too into it. Scalp trades, that's one type of trade that we get in. The second kind are these more directional trades. When I say directional, what I mean is ones that go not just like an hour to 2 hours through the day, but ones where you're holding for big moves or squeezes or whatever the case may be. And for those trades, the chart is much simpler because it's a pure price action chart, and all you're doing is looking at 2 things. Number 1, you're eyeballing the key levels, right? Places where you get a lot of support and resistance. I use the hourly mostly for this. So a lot of the levels are going to actually coincide with levels that you'll see from the scalp chart. But what's key here too is this is where you put your things like your gap levels, right? So I'm going to put those in here. All right, so let's get that color going. Okay, yeah, I use purple for that. Right, so you've got like gap levels in here. You've got key support and resistances. That's number 2, directional. What you're looking for there is pretty much the same kind of price action signals that you would get from the scalp trades, but you're looking for, right, you're getting more space between them. because the indices you're getting are bigger. So you're going to have to sit through a little bit more drawdown probably at some point. You're going to have to sit through a little bit more theta. But the plus side is you usually get a big pop or big drop if you're right about the directional, or if you're right about the direction of the day. Third, let me do this third. So third is, we all remember the channel of destiny, right? So this is what I would call structural plays. Structural plays also are kind of, you can mix and match them with swings a little bit, but essentially these are trades where you're following a longer term market trend or structure, and you're waiting for support or resistance at those to kind of tell you what might occur. So like here, for example, this would have been a good, I think we did actually take something similar to this. This here would have been a good directional trade, which often turn into swings, right? So we've got a resistance here at a level, and then a double topped here. And we saw, because we saw with the channel, right, that we're headed down to this level here. It flags. We keep going down, right? So this would have been a great directional trade probably, right? And when we opened, we bounced off of that. You could have taken it down, rode it all the way down for 6 points. Another directional would have been up to try to go for the reclaim, right? So those are structural trades. I call them directional. Those are structural trades. Ones that see you trying to either catch support, resistance, normally at trend lines, channels, trying to do reclaims, loss of trends, right? Those are a little bit more advanced concepts, but not really. They're the exact same as the other ones in the sense of you're just looking for losses, level breaks, gains, levels breaks, and failed or past retests of those levels, right? So that's the third one. And outside of that, I'm just going to focus on this here. I'm not going to do the fourth. So those three pretty much are all you need to figure out for the day, what is it I'm going to be doing? The fourth component of that, which I'm just going to give you, is that you're looking at the pre-market, right? Whoops, and you can do that in any of your charts. So make sure that you're looking at the pre-market and hours action and identifying those levels, because those are going to be important the next day, usually if we're in a range. So understanding where you are and what the key levels are, because that way, for example, if this was, right, like this is all after hours on whatever it is April 8th. Right, so this is all after hours. So when we get to the open, I know that if I see one more failure at that level, right, then we're going to get a stop loss candle hunt that's going to break down that flag. And there's a stop loss candle hunt, and then it comes back up. So those are things that you know because you've been watching what the levels of support and resistance are. Like this happened at what, 2, 3, like, right? Like this is all after hours basically. And then this drops down off the open, yeah, because that's 7. So it drops down off the open. So paying attention to what's happening during those times. I know a lot of people don't watch after hours. They say there's not enough volume, but those levels come into handy like a lot. So that is part one, the intro of just the 4 different types of plays you could be getting yourself into and what the charts are for those. So the first one is scalping. You're going to need your full monthly, weekly chart, right? So that you know when you're getting in, you know when you're getting out, and where your strong support and resistance are. And these are like 20, 30% plays. You got directional, which are just going to be using major levels, right? And when I say major levels, I mean like points of reversal, points of support where you see it happen multiple times on an hourly time frame. And also you're going to put your gap levels in there, which I'll talk about in the video specifically about this. And then finally, we've got our structural trades, which are longer term, right? Think more swing. And these have to do with either following a structure or breaking a structure and how you're going to play it after that. Those coincide with levels too, but we'll talk about that later. And of course, you're going to get your pre-market and your after hours levels. And that's it. Like those are 3 types of trades you get into. And the fourth is just one of the factors that's going to be across them all. I'll break them each down if you guys care. All right, later.